So I got the monthly statistics for May, but I first wanted to share this screen with you that I put out just so you can kind of get a feel for. Can everybody see that okay?
Yes, thank you.
A little bigger. How about that? So every week now I've been, because we're in a shifting market. It's not necessarily a shift like we had in 2007 and 8, but it's a shift. And I've been putting this out every Tuesday, looking at the last 7 days. And this is, I think, the fourth week I've done it. But take a look at what's happening in the market. If you take a look at new listings, 836, exceeding sold listings, exceeding pending listings, and look at the number of price drops. So you can look at that any way you want, but those price drops, if you look at them individually, are not usually just, $1,000. They're significant, and they are basically people that took a stab when there was no inventory at getting a price that was much higher than the previous sale in there. And now we're starting to see inventory come into the market, and we're starting to see people going, well, I really did want to sell. Mark, what do you think we should do? And Mark says, well, Jeff, we talked about, pricing when we first put the listing out there. And, we talked about what was going on in the market. And while the market's still quite good and we're still very much in a seller's market, we haven't had a single showing request for your listing for the last 10 days, and that's generally not a good sign. So, well, Mark, what do you think we should do? I mean, do you think we really want to sell? Okay, well then let's try to figure out what the best market price is. And you're seeing some pretty significant price drops. So you can actually go into that little widget on the front page of your MLS screen, and you can click on price decreases, and it will give you a list of all of them that have happened in the last 7 days. So a lot of good information out there. Also, if you're working in an area, farming an area, or looking in a particular area for the buyer, you can go into that little widget and customize it to the particular neighborhood or MLS area that you want. We're just using all of Southwest Florida and then Collier and then Lee. But look at the information is, and the trends are quite similar throughout the whole market. Look at Collier, 255 in, 239 sold, 223 pending, and 286. So you had more price increases than you had new listings. And then in Lee, of course, which includes Cape Coral and the whole Bonita Estero area, 530 new listings, 481 sold, 524 pending, and 496 price reductions. That's a lot. So keep your eye on that, and keep your eye on the fact that you're working with a buyer. There's not only new listings coming in the market, but there are price reductions which may fall into your customer's price range. So, take a look. We call it a shift. We're definitely gradually heading more toward a balanced market, although we're still very much in a seller's market. And we'll show you that in the luxury side here in just a minute, we have a great deal more inventory in terms of months supply than even we had a year ago. So the luxury market again is offering more choices. The other thing we're seeing is builders. I don't know how many of you are getting teaser ads from the builders, but they're now our friends again. They were like, well, we're going to cut our commission to 1%. Thank you, Pulte. Thank you, Lennar. But now they're coming back and going, hey, Mark, you're a friend of mine. Hey, Diana, we'd love to see you come out to our complex. And hey, Lauren, bring your buyer. You're on our good list again. And what's happening, a lot of it is if you have a buyer that was interested in new construction, but there wasn't, there were no options, or there was a bid option, which means that you had to win the bid. Now there's inventory. And what's happened is we signed up for this house. It's been taking 8 or 9 months to build, maybe longer because of the material shortages. So we signed up for this, last July or last August or last September or last, fourth quarter, when what were the interest rates then? Under 3. So now I'm getting ready to take delivery on this house and it's 5.5, 5.75. Well, the affordability factor just almost, got cut in half there. So I think a lot of people that were, contracted for new construction that put deposits down are saying, well, I don't think I can afford this house. So there's opportunity in these new construction neighborhoods is what I'm trying to say there. So look for this. It's on the Facebook page. If you want it emailed directly, please just feel free to ask me.
And just, Jeff, as a point of reference, I checked this morning, there are 5,680 active listings in the MLS as of this morning. Now that includes some areas like Port Charlotte and other areas that are not in Collier or Lee County. But those are small numbers in that regard. So to give you context of the luxury properties, 20% are over $1 million of all those 5,680. Approximately 20% of those properties are over $1 million.
Okay. Can everybody see that?
Yes.
Okay. Yeah, just to put things in perspective, round numbers, we started 2021 with 12,000 listings. We started 2022 with around 4,700. So now we're looking, according to your numbers, Mark, almost double the number of listings that we started with in January of 2022. So the inventory picture is improving for sure. Now it's interesting, this is Collier County sales of properties over $1 million and comparing May of 22 to May of 21. And we've all been looking at the big difference between the markets. And as we all know, 2021 was one of the best years we have on record. But look what's now happening in the luxury market. And luxury market is showing quite a different picture than when we look at the overall market. So look at the median prices, flat overall, down 1% for single family. And of course, condos are still going up a little bit. We talked a little bit about median selling prices in the last sales meeting and in the NABOR report that was just put out. But what's happening with median prices may be a little different than what's happening in a particular neighborhood or development. Because remember, the median price is the middle. And what's happening is the middle in the entire market is shifting upward because there's no inventory really under 300,000 anymore in Collier, and all of it's shifted up. So the median is shifting up because it's the middle price among all of the sales for that month. But if you look at it in the luxury market, okay, the median is not shifting that much. Still in condos, because you'll notice that the month's supply of condo inventory is still quite a bit lower than the overall supply. So as single family inventory hits 4.2 months at the end of May, that's pretty much headed toward a balanced market of 6. We consider 6. Some markets consider 12 months of balanced inventory. We've always looked at 6 because of the nature of our market. So, but look at the overall changes in the market here. We're still seeing less days on market on average, but we had 433 new listings come into the market in Collier County over $1 million in May of 2022. That's up 38% over last year. The pending sales down a little bit, as we saw in the 7-day chart, and the overall closed sales now starting to trend back up, whereas they had been showing significant decreases. So we're looking at a shift in the market right before our very eyes. And it's not necessarily a bad shift, other than the fact that interest rates are quite a bit higher, double what they were a year ago, and that we're in a recessionary behavior in the economy, which is obviously going to have a damper on the market. But we're still seeing an increase in luxury sales over last year, which is a pretty interesting sign. Now, those of you that look at the stock market, you're seeing that it's taking a pretty big hit. So, my guess is some people are going, wow, this might be a good time to buy some real estate and try to stabilize our investment. We talked a little bit about, generally real estate prices and real estate appreciation exceeds inflation. We have some fairly high inflation now, so it may not exactly do that, but we talk about a 6 to 7%, sometimes 8% appreciation in the market. And, that generally exceeds inflation. So is real estate a good investment? Is it a hedge against inflation? Certainly not an economist, but that's basically the story that's being told.
Jeff, I think when we look at closed sales, we have to keep in mind that some of those transactions have been under contract for 30, 60 days or more. And so they are not as reflective, I'm not saying they're not reflective, but they're as reflective as the pending sales are, and days on market for pending sales, as well as whether the price adjustments that are taking place. Those are sort of like when you walk into the doctor and he takes your blood pressure and they take your temperature and that sort of thing. Those are the in the market, in today's market. And the closed sales are a bit of a lag in the sense that they've been under contract. So as the stock market went down, we'll need to follow these numbers a month from now and 2 months from now to see what was happening in June of 2022, that we finally see the numbers show up in the closed sales in July and August.
You might even see them go up more, but this is the first up arrows we've seen comparing 2022 to 2021. And 2021 was a great year. So, and the other thing that we're seeing up arrows on for the first time is overall inventory levels. Look at the amount of inventory that's gone up over a year ago in the luxury market. So, all of these are pretty good signs that people are going to buy luxury real estate, in this environment, because it's still a good investment. And we're seeing more listings come in the market, more choices. We're not seeing significant median sale price increases. We're seeing inventory up quite a bit over last year. So overall, if you're a luxury, if you're working in the luxury market, you have a great story to tell to your potential buyers. And that's what this graphic is for, is to share with your potential buyers and say, okay, this is a pretty good time. And if your stocks are taking a hit, what about maybe looking at a hedge against the inflation that we're experiencing? So,
one other thing I see in the numbers there, Jeff, and you can comment on this, is if I'm going to be targeting for what's the most likely property to sell in the current market, it might be something in the $1.8 million condo range. If you get a listing in that price range, there's a pretty good chance it's going to sell.
Yeah.
If you have something, again, depending if it's in a good location, a good condition, the amenities it has to offer, the fees, and that sort of thing. When we begin to look at homes in higher price ranges, significantly higher price ranges, you're going to see more diverse numbers. You're going to see some that sell very quickly, and you'll see that as well in this price range. But you might tend to see things that take a little bit longer, because it's sort of like the pyramid. There are fewer buyers at the top of the pyramid than there are at the base. And the numbers that I'm looking at there on your chart indicate that there's a pretty good chance that something's going to sell if it's in that, let's say, $1 million to $2 million price range.
So a couple things here. The single family home inventory, it looks like some of the pressure is off there was a rush to single family homes when the pandemic first hit. And as you recall, the inventory levels for single family homes dropped. I think they dropped sub 1 month for a period of time because of the demand for people, wanting to get out into larger spaces and wanting to have more family capacity. But now you're starting to see that shift around a little bit, and the demand for condos is a little bit higher, it looks like, because there's less, almost more than a month less of inventory. So a lot of interesting information in here. And notice that list price to sell price still holding pretty steady. So even though we're seeing price reductions, we're seeing that the prices that they're being sold at, and we're not comparing original list price to selling price, we're comparing the last list price to the selling price.
As we oftentimes talk about, it's like if you're fishing and you have your bait on the hook, you've got to get the bait in the middle of the school of the fish. And that's what we talk about as an analogy with real estate pricing, is if your hook is too high and the fish are swimming below, you're not attracting as many potential buyers. And if you adjust the price and get the price within the school of the fish, more likely you're going to get a bite.
Yeah, the last thing before I move on will be that still over 60% of the sales in May of 22 were cash. So we're still in this market fairly heavily cash market, so not quite as sensitive to the change in rates. You're probably going to see people that were originally intending to pay cash but got a loan because they could get a loan at a low rate. You probably see some of that behavior go away. All right, let's look at Lee County. Back to zone. Back to zone. Back to share. Back to Lee County. Can you see that okay?
Yes.
So the picture in Lee County is quite a bit different. And the behavior of the market is quite a bit different. So you have median prices, again, fairly stable. No change in the single family median price from May of 21 to May of 22. You see days on market still down, going down over last year. But look at the number of new listings coming into the top of the funnel, 87% more than last year. And pending sales now have gone up over last year, as are closed sales up significantly over last year. And now we're seeing, inventory come down a little bit because of the increase in sales. So this is a substantial difference from Collier, and especially when it comes to closed sales. And even though inventory went down, still sitting on 4 months overall, 4.4 single family and 2.8. So we're still seeing quite a bit of inventory out there relative to what we had, have had in the past. But these inventory levels are down a little bit over last year because of the increase in sales. And some of this is probably, Mark, you might say, some of this is the fact that Lee County has probably more favorable pricing for luxury homes than Collier County. And people probably that, are looking also in Lee County and finding, more choices and, buying more homes.
Yeah, I'd have to look at the side-by-side inventory numbers, not the percentages, but there might be, let's say there's what I say 20%, let's say there's 1,000 properties in Collier County that are above $1 million, and there might be 350 in Lee County. So when we look at the percentages, they may not be an exact correlation county to county, as looking as you're pointing out, comparing 1 year over the other, or 1 month, let's say April to May, those numbers begin to paint a slightly different picture.
But it's significant, the difference, especially in closed sales over Collier. So it's starting to see that there's a more luxury home sales going on in Lee over last year than in Collier.
And you've got a lot of luxury communities off of Corkscrew that may be a part of that, where there's new construction going on.
Yeah. Yeah, I mean, it's, you know, there's some very nice homes going up, and those homes are now have moved into the luxury market, whereas they before might have been in the 500 to, 800,000 range. Now those homes have bumped up and are really considered part of the luxury sales. So there's some beautiful communities that are being developed up in Lee County. So there you go. Any questions or comments?
I think that, again, it's sort of reading between the lines is you need to know the inventory in Lee County also. You may have someone who comes here from another part of the country and they've heard great things about Collier County and what we have to offer. And yet their budget may be such that they're looking for something bigger, but at a less expensive price. And are you familiar with what the options are in Lee County?
Yeah, I mean, the affordability factors clearly favors Lee County, especially in new construction and new work.
And for the Naples office, Lee County is what, 10 or 15 minutes away. It's not like it's an hour away.
Yeah. We have a lot of our sales of our office are in Lee County, Bonita, Estero, Cape Coral, and quite a few in Lehigh Acres, which is becoming an emerging area for single family home sales. So that's good. All right, so I'll put these out to our luxury mailing list here as soon as we get off the call, and I'll also put it on the Facebook page so everybody will have access to it.
Thank you, Jeff. As we're looking at those slides, I also thought we're going into July now, and typically we find serious buyers who come to Southwest Florida in July, August, and September. There's a good chance that their friends are not here, so they're not coming on a winter snowbird visit. They're actually looking for a home. And so while we have those opportunities, we also have a little bit of breathing room that we don't seem to have in January, February, and March when everybody's here and we're trying to keep up with the demand. So my observation is to take advantage of this time and get out and learn about other communities, and especially the new construction that's taking place. Go out and go to the open houses, whether it's within our company or with another brokerage, and get familiar with the inventory that's there and become sort of the market expert, whether it's in your farm area or in an area that you'd like to market to. But the best thing I think that you can do is to take advantage of this time and get out there and get familiar with what's available. For those that are with Keller Williams that are listening, in August, there's the Keller Williams Mega Camp in Austin, Texas. You can register online. I believe the rate goes up tomorrow. So if you're planning to go, now is the time to get the lowest rate. If you're planning not to go, but you'd still like to take advantage of it, there is the online access to get it live streamed. And I would encourage you to sign up for that. Again, staying abreast of what's happening, not only in our local market, but across the country, and not only in luxury, but in all aspects of real estate. A lot of that information translates into luxury very easily. And it's up to us to be familiar with that and take advantage of those opportunities while they're there. There are other agents with smaller brokerages that don't have those kinds of offerings. They don't have those conferences to attend, and they would love to have that kind of opportunity and information. So be sure and sign up for Mega Camp and take advantage of that.
And they always have some great luxury breakout sessions for those of you that are, interested in luxury. They have some great sessions, and ever since they've really revamped the luxury division, there's been a lot of progress and a lot of great information, and also referrals. I mean, there's still a lot of people that want to come down to this area, and if you connect with some people from other markets, the referral connections alone are what sets Keller Williams apart. So you can, even if you're online, you can still put your profile out there, and you can still actively reach out to people that are also registered and have a profile that are in other markets that are feeding markets for Naples.
I just wanted to highlight a couple of transactions, if I can. One is Wendy McCarty on Marco Island has a pending sale. It was listed for $6,300,000 at 999 Spruce Court. And then we've had a recent closed sale by Denny Grimes in Pine Ridge, a listing that was listed for $5,250,000 at 263 Ridge Drive. We've got an active listing again with Wendy McCarty from Marco Island at 453 Parkhouse Court, and that's listed for $5,175,000. And again, when I'm looking at these numbers, I'm looking at information such as the size, the year built, what the amenities are the community may have, what the fees are, how many days it's been on the market. So good to become familiar with that kind of information. And then we have some folks that are with the Kane luxury team who've had some recent sales. And let me just go back to that screen for a moment. Take me a second to get back there. So there's the Kane luxury team, Lisa Ann Lagren. She has an active listing at 469 Germain Avenue for $7,995,000. And we have a pending sale with Tina Morocco with the Kane team that's a home in the Moorings at 210 Bay Point. That was listed for $7,775,000. And the third, another active listing in Seagate in Naples with Hannah Goldstein, listed for $5,995,000 at 5221 Sanddollar Lane. Again, opportunities to connect with those agents and learn more about their listings to see perhaps you have somebody in your database that is looking for a unique home. And I would encourage you to take a look at those listings that are the active listings that are still available.
So I know Mark is bashful, but he had a really nice sale in Bay Colony here recently. And wasn't that a referral?
It was.
So tell us a little bit about that, Mark.
Well, I can't share some confidential information about who bought the place, but what I can tell you is that it's someone that I worked with since October of 2016. And so patience and consistency and customer experience become important attributes to success. So sometimes we tend to look for the shiny object or chase the squirrel, if you will, the euphemism. And other times it's important to stay in contact with your people. And what I will say is they have been the nicest couple to work with. It's been a true pleasure to help represent them.
Congratulations. One of the things that's been talked about a lot on James Shaw call, and for those of you that aren't on that for 15, 20 minutes every morning, I think you're missing a big opportunity. But interestingly that, we started back in 2020 when the pandemic hit with care calls. And care calls are I think, still a great way to reach out to your database. Obviously, people are hurting with the gas prices and the inflation. And they need to know that the real estate market is still doing pretty well. And that if they're considering an investment that is a hedge against inflation, something that they might want to take a look at. I think everybody, when the inflation goes like it has and gas prices, everybody thinks that, real estate shuts down, but it's been real estate that's been the horse that's pulled us through the pandemic and several recessions. So real estate investments are still good. We're still have around 60% cash in our market. So people that have the money, this might be a great time for them to buy, but even greater time for you to just call and say, how are you doing? How are you weathering all this? This is a difficult time for our country and for our economy. And a simple care call can be worth its weight in gold.
And I would say if you're going to make the care call, do a little due diligence before you make the calls. Yes, it's about them. It's not about the real estate market per se, but you don't want to come across as not being knowledgeable about what's happening in your marketplace. The consumer hears the national news and hears numbers of how homes are up or homes are down or prices are up or prices are down. But generally speaking, those numbers are national numbers. And what they're looking to you for is local market information. So, and it might be more than just Collier County, Lee County. It might be beachfront properties. It might be golf course communities. It might be neighborhoods or developments like Pelican Bay, or it might be a particular part of Marco Island. But try and do a little bit of homework before you start making those calls. Yes, make the calls about them, but if given the opportunity and they ask you what's happening in the real estate market, you don't want to come across as not being prepared.
Yeah, the number of opportunities is greatly improving in our market.
Well, thank you, Jeff. Does anyone have any questions before we end the call? Very well, then. We look forward to seeing you on the first Friday, unless I'm mistaken, if that's not a holiday. I have to look at my calendar here for a second. That would be the first, July 1st.
Friday. I'll have some more stats for you next Friday. So.
Great. Thank you all for coming. Look forward to seeing you on the next call. Bye now.
Thank you, Mark.
Stop the recording.